Okay, so about EEF, what do you think?
Well, you might ask, what's the secret formula they tell you on the EEF course? I, who attended this course, I have the feeling that there is no secret formula what you could get in a book or in a closed envelope, after all. But this is much more about the attitude, the approach, or the vision you can have when you are an entrepreneur, and how this transforms the way of thinking. And at the end of the day, that's what is important for an investor. And most of the entrepreneurs look for some funding, after all, to fulfill the business plan. And once your vision is clear, once your attitude is clear, then this is the solid base to have a profound and well-prepared business plan. And if you have a good business plan, if you have a good venture upon that business plan, and you have this vision in you, you have this attitude, then you are actually a very investor-conform, an investor-ready story. And you probably know that there are a couple of investors on the market eager to find some attractive opportunities. So having all that skills, you are surely a desired target for all those investors. Let it be Hungarian investor or someone from the region, because as I see for Hungarian startups, more and more investors from Germany, from the Czech Republic, from Poland, or actually from all over the world are potential partners. Even more because once an international investor, a foreign investor comes and puts money into your venture, then automatically you will have an international approach, an international access, and probably they can get access to new clients, to new opportunities, or simply new people who all move your business forward. So that's a very, very healthy approach, very round story, or as Peter calls that, a real ecosystem. Thank you.
So what do you get from this EEF course?
In one word, good attitude. Experience, good attitude, and last but not least, good contacts. Because I was really fascinated by the people who were invited by Peter, and having different success stories in Western Europe or overseas with their ventures in the past. And they come over here to this small village called Budapest and tell us how they see the world, how they see the opportunities, how they handle opportunities, and how they come across different problems. So that's what you can learn. And that's in one word, attitude.
As a former, as a current, as your job is merger and equities acquisition, what do you think about venture capitals? How they approach startups? What do they see in startups?
Well, actually, venture capital is probably the second step of financing. The first one is the seed capital, as it's often quoted, provided by the 3F, family, fools, and friends. And once you get this seed capital, you can work on your concept, get a proof of concept from the market, and then when you're ready with that, you still see the star shining somewhere high above, then you can go for venture capital. They take the venture, invest into your product, into your company, into your idea, and give you the chance to to prove the business model, to show that you can sell it, to show that it works. And once they do that, then you will have a profitable company, at least on the operative level, different levels of operating profitability. And then you will need private equity, growth capital, in order to multiply this success. In order to go other countries, in order to set up a new product group, in order to approach other group of clients. So that is actually the life cycle of an investment, the life cycle of a business with various steps of investment. And as a result out of that, venture capitalists look for opportunities which have already proven that they are ready to absorb the amount of their investment. Say €500,000 or dollar up to 3, 4, 5. So they are ready to absorb. And of course, all the ventures would say that, yeah, sure, I can spend it, but absorbing meaningful investment is something different than spending it. So once they see an opportunity that is ready to take this money and invest it and produce realistically a good high return, something between 20 or 30% yearly return on that, internal rate of return as it's called, then they go for it. They do the investment in order to have a big success at the end, to earn 10 times that much within a few years.
Would you invest?
What they have in their mind.
Would you invest in a team or in an idea?
Good combination of a team, a powerful team, an idea, a concept, and a market opportunity, probably. That's even more important than the idea itself, that the market opportunity is really there. You can bring something to the market which is desired, which they need.
Can I ask you something about the today's news? AOL and the Yahoo merger. Did you hear about that? What do you think about that?
Sure, that's the way of life. I mean, animals eat each other. Or that's also called market consolidation. And a few seconds ago I told you what is the life cycle. Actually, the life cycle ends that a successful venture becomes a large company. Then in a few years even larger, becoming probably the market leader. And that's quite natural that market leaders sooner or later will transform or sell one of their business units or will be acquired by another market player. So that's again the ecosystem, the organic nature of the business. So life goes on. Tomorrow another huge company will buy another one, and then they will sell some of their departments, and then those departments will elaborate a new business concept and probably became even larger than their former parents' company. So that's quite normal. What was the
No, this that
of your question? I mean, with AOL Yahoo merger.
yeah, it's today's news. Today's news that the market is talking about the AOL and Yahoo merger. Whether it is possible, it's going to happen. What's your view on the market? But
I'm not familiar with the insider information, and if I would, then I would be not in a position to tell about that. But as I said, that's the way of life in business.